What is up, YouTube? What is up, guys? The Composer Trader here, and welcome back to another post trading analysis video. And man, we have a lot to talk about. I took a trade on BTC, I took trades on a few altcoins, I had a trade on gold, and lots of price action. Also, lots of questions from you guys talking about this range. Was it a Model 1? Was it a Model 2? Why is it currently failing? What happened on that Sunday wick of the accumulation? So we're going to get into everything, starting with Bitcoin, and then we'll flow over into the rest. So let me take a sip of my water, and let's just jump straight into it, right? So let me talk with this POI. Let me talk about that POI first. It is an 18-hour order block, but literally I did not put any significance on that block per se, because that block was part of this PO3 formation where you had the range, you had the manipulation, and you had the expansion. And in my opinion, the market makers that shorted up here already took profit down here at this extreme liquidity grab, right? I was like, why would the market maker still be in that trade? Why would they want to protect their positions when price comes back in there? Furthermore, if we zoom in on the block itself, we can see that the block itself just consists of a liquidity trail, right? So, we can stall around for a bit, but it wasn't the best POI for a short, in my opinion, when we came into the block. Now, obviously, if we see a range formation and we see some sort of distribution, we can put more importance on the block because now we see that the block is actually doing something. But prior to that, I had no high expectations of this block. Now, the way we came into it, we were obviously simply just uptrending with a high, higher low, and a higher high. Guys, this is how your range started, okay? This is simply how your range started. So getting rid of that market structure tool, you had the range high, you had the range low. And guys, let me tell you real quick that I'm going to be using TCT concepts. If you haven't watched my tutorial, make sure you go and check that out. But either way, I have a mentorship coming that will be released here on YouTube. So make sure you have your notice on for that. And it's going to be insane. It's going to be 20 hours of just straight educational content teaching you everything that you need to know, especially with the concepts I am showing here and displaying here for you right now. So we're in an uptrend. We pull our range from top to bottom, and then we have our range high and we have our range low. Okay. From there, we had our deviation 1 at the top, and we had a deviation 1 at the bottom. Okay, that's how it started. Right here, we can see this is a valid 15-minute deviation because you came into it and you pushed away with 2 candles and you came back. Okay, now after our first deviations, we extended to our deviation high. So range high goes to deviation high, range low goes to deviation low at that point in time. And from there, very quickly after our deviation 2 at the bottom, we got that third deviation going lower than the second one, indicating some sort of a TCT Model 1 accumulation. Okay, TCT Model 1 accumulation, and we did have some nice buy-side liquidity highs above us. Now, this is a valid, technically speaking, it is a valid accumulation. Is it the best? Is it the prettiest? No, because this range at that moment in time wasn't that pretty yet. I would have preferred if we, could have ranged a bit more, higher and lower, and then grab one, instead of immediately having these 2 deviations back to back without having spent that much time in the upper section yet. But it could make for a nice squeeze if we do go up there. Now, in order to confirm, obviously, your TCT Model 1 accumulation schematic, we have to break structure from the highest point between tab 2 and tab 3 down towards our third tab low. So this is tab 2, this is tab 1, this is tab 2, this is tab 3. Okay? This is the highest point between tab 2 and tab 3. Now, let's zoom in and check our market structure applying the 6 candle rule. And we can see that just grabbing our most local structure, we have lower highs and lower lows. And then right here, probably on the 2 to 1 minute candle, this is structure. And that broke the bullish right here. The moment we got that candle close above, that is where it broke back to bullish. Okay? Break of structure, back to bullish. At that moment in time, okay, your Model 1 accumulation is confirmed. Now, the timing is definitely off. Okay, the timing is off. That's why also I would not trade this. Maybe I would trade it and I would close it before Saturday opens just to see if we could get that squeeze on like Friday closing session. But this would be the trade. Okay, it would be a 3.17 risk to reward, which is extremely nice. Okay, that's extremely nice. Um, but then this will be it. Now, the fact that it's on Friday PM, I'm not too excited about that. Okay, I'm not too excited. I don't really trade that. Usually after Friday 6, 7, I kind of clock out. Okay, but you can see that eventually prior to price came very close to that stop loss. But if you just held this trade setup, you hit your take profit eventually on Monday Asia. Okay, so after the week or after the weekend was closed. Now, when you guys have a deviation 2 and 3 very close, very close to each other, and you realize that this range is also valid on the 1 to 2 hour, okay? I want you guys to make the realization immediately make the realization of, hey, this model 1 can flow over into a higher time frame model 2 or a higher time frame model 1. Because if I'm on the 2 hour, which by the way this range is valid on, like we just discussed, this is just one deviation. Okay? So always I'm sorry guys. Always be aware of that when trading a more local time frame accumulation, when on the higher time frame it's just one. Now, does that withdraw you from not taking the trade? No, it doesn't. Especially if we have a return to zone, we got all the tabs, and we got the confirmation. You can still take it. You just need to be aware that you can get stopped out or price can take a while, grab some extreme demand or liquidity in this area prior to moving up. Especially on the Friday PM, okay? Especially on the Friday PM. Now, let's extend this over, because as we can see, what happened from here is that price put in this local uptrend, and then from there, we kind of had a 1, 2, 3 within the range. And this one had no good confirmation. I was actually watching it, and this was the target. So my thought process at that point in time, I was watching this distribution and had no good break of structure in it. But my thought process was, hey, this could be right here. This could be a TCT, an internal TCT Model 1 distribution schematic, where the sole purpose of this schematic was to grab this first market structure low, which is your extreme liquidity, and then move higher, confirming your higher time frame 1, 2, 3. Right? And that's exactly what happened. That is exactly what happened, but I did not get the entry on that third tap right there. I think it was like a buy to sell with no good structure. Yeah, there was no good structure in this leg, I remember. Yeah, there was no 1 minute structure until down here. Just because this was a one pump candle up followed by this retracement prior to it. So no good confirmation on this short, but it is exactly what happened. We grabbed this extreme liquidity and we knew, hey, this could be a higher time frame model 2 accumulation, obviously if we break structure. Now, let's ignore that. Where is our structure? Well, we can see our structure from the top down. We have lower highs and lower lows. Lower highs and lower lows. Boom. Right until this area, and this is where we broke structure. This is where we broke structure. And that structure also got confirmed, right? Right after that structure, we had the higher low for the higher high, actually confirming that this break worked. This break worked because after that break, we got the higher low for the higher high, right? Now, we can even see that locally in this area, this looks like some form of a local Model 2 accumulation, where we have our 1, we have our 2, and we have our 3. It didn't really have any structure. Otherwise, you could trade a TCT schematic within a TCT schematic, and you could have been chilling. You could have had a way better risk to reward play. But yeah, there was no structure in here. No good structure. Very low volume candles. So that TCT schematic within TCT wasn't available or wasn't valid. to trade, and then this happened. Okay, right here, the break of structure got confirmed. So technically, if you were to take this on the break, you would put your stop below your third tab low. You would target the high. Okay, for a 2.17 risk to reward. Now, this happened. An absolute stop loss hunt. Okay, an absolute stop loss hunt. And at TCT Trading, we basically trade these moves. But in some occasions, the moves happen to us. And we just have to accept that. Okay, it's Monday open. Okay, this literally happens on Monday open. So always be aware on Monday open because things can go crazy, right? The week just opened. So you can see this literally happened on Monday open. So to be honest, if you take this trade and you had the right thought process, the Model 2 became a bit less good because this TCT schematic in here kind of already took some good looking return to zone, right? It kind of messed that up a bit. But if you took that trade, there's nothing to worry about, you know? Nothing is 100% in trading. And this is just one of those scenarios where, you know, that 10 to 20% of the losses come in this way. But do note down that, hey, watch out. Truly watch out on that Monday open, okay? Now, from there, we got the Model 2, which would now this be your valid third tab, okay? We got the Model 2, and then we had a very nice looking buy to sell right here, very nice buy to sell during Asia on Monday. Now, we know that, hey, this can be a Model 1 TCT distribution schematic where on the 1 hour and on the lower time frame, this Model 2 can go over in the Model 1 because we could be at an area where we could potentially reject, okay? And we could have a 1, a 2, and a 3. Now, some of you guys send me a screenshot of, hey, but Lars, if I just draw 4-hour market structure, okay, if I just draw 4-hour market structure, my range looks like this because that you have one move and you have a high and a low, and then this becomes your range, right? Where this is your range high, that's your range low, and this is your deviation 1. So is this a second tab on the higher time frame, or do I have to trade it as a Model 1? Well, I kind of already told you guys in the beginning in this local Model 1, the fact that on the higher time frame it's 1 deviation just means that you can come back for a higher time frame Model 2, or you can get stopped out for a higher time frame Model 1. And then that rule of low time frame schematics going over into high time frame schematics just allows you to trade it again if you get the confirmation again. But it doesn't mean you cannot trade the Model 1 itself. No, that's still a Model 1. This is still 100% a Model 1. Okay? It just means that if we take the high one more time, let's say we come back up and we take the high one more time, if you stay on the 1 hour, you will think we'll have a 1, 2, 3, 4. If we get the confirmation in here, we can still trade it because we know on the 4 hour, this is a 1, this is a 2, and this is a 3. That's the only reason. Okay, that's the only reason. Now, if you have very good looking supply up here, that price did not tap, then you can kind of already assume that we'll probably go over into a higher time frame Model 2 because price wants to mitigate that supply, but that's besides the point. You can trade this Model 1. Now, because we had such a very aggressive buy to sell, you didn't have structure right until down here. Okay, so right until here, this Model 1 actually got confirmed, but you know, no one wants to trade a trade that's this big with a risk to reward of 1.17. Okay, it will take forever to play out, and it's only a 1-to-1. So that's not really a good trade. And then from there, during Monday itself, guys, this was terrible price action. Like, absolutely terrible price action. It has been a minute since I have seen this ugly price action. Like, even Saturday and Sunday was better than Monday. So that was horrible. Absolutely horrible. Okay. And then I was looking for, hey, where is my extreme liquidity? Where is my extreme supply? Okay. in case this does want to go over into a higher time frame model. Now, I was checking, hey, on the 10-minute, where is your first market structure pool? Lower high and lower low. This, technically speaking, then becomes your extreme liquidity point. But what's even better is that in this move down from top to bottom, this is kind of right here at this candle. That's kind of where those ugly highs started. So I would have preferred in that moment if price could come up all the way to that first high, like the first just candle high that caused that liquidity trail, where above there is that inefficiency. And we did both. So I absolutely love that. Because what that meant is that now from a liquidity perspective, there is truly nothing else to grab, okay? If this is going to be a model 2. So just because we grabbed that literally the extreme one, I was very confident into shorting the lowest time frame market structure break here because I knew a price for the Model 2 had no reason to come higher again. Like absolutely zero reason to come higher. So I went on the 1 minute. And then I found my entry right in here. I was very confident in this trade, like very, very confident. It was a high time frame model 2 and a low time frame model 1, or a lower time frame. I'm gonna say low time frame. So I kind of front ran the break. Do not copy that, okay? Do not copy that. But sometimes, if you know, you know. Once you become more experienced. So I had a 0.5 stop loss. Yeah, you can see there. I had a 0.5 stop loss. And then I targeted this low for a 4.4 risk to reward. Now, I entered with a 2% risk. Why? Not only did I take this trade, as with the mindset of, hey, I'm going to take this trade and just cash out, I also saw it as a hedge to my spot portfolio. Because we were in this moment in the chart, or in this area in the chart where, hey, if this is going to be a high time frame distribution, then we could potentially even lose this range and mitigate some demand either here before going higher, or even come back down all the way to 57.1. So I was like, hey, this could either be a crazy runner, right? I'll take some profits along the way, don't get me wrong, but it's either going to be a crazy runner to hedge my spot, or it's not going to be a significant trade and my spot just continues to rip. Because guys, I don't know about you, but I have been accumulating and they're absolutely pumping. So I don't know what your bags are doing. Let me know in the comments what your bags are doing, but mine are doing good. Mine are doing definitely good. Now, from there, we were really struggling. We were really struggling with losing this POC, right? We just couldn't lose that POC. And not only did we have trouble losing the POC, if I get rid of this equilibrium, just know, guys, that the POC is right there, okay? So I'm going to delete it. As you can see, we even, after our break of structure, confirmed an accumulation schematic. We actually had a nice little 1, 2, 3 down here with a break of structure. So I was like, oh, that's not the best. But the thing is, we had like a 15-minute supply zone. Yeah, we had a 15-minute supply zone here. So I was literally thinking like, hey, this can just, the purpose of this Model 2 accumulation can just be to mitigate that supply before going lower. And that's exactly what happened. So I was chilling, right? Right here while I was making the post. But that, hey, on the high time frame, this is a Model 2, right? With your 1, your 2, and your 3. But we cannot neglect the local time frame, like the 2-hour. And on the 2-hour, we also have a Model 2 accumulation that already hit its target. But as you can see now, we got this nice curvature up effect. This nice rounding up bottom. So even though this accumulation already hit its technical target, which was the range high here, and it could go over in the distribution that got confirmed, if we cannot lose the lows, right, and we just put in higher lows, that shows that demand is still in control. And this can simply all just be higher lows and demand mitigations in these wicks, because wicks are also demand mitigations. And we can literally just have a demand chain going up, and we have a rounding up effect, invalidating this distribution, because in general, this wasn't the best area to reject from, right? We have all these highs here. We have these highs, the high at 65.6, and then that 66K area. So this could simply just continue itself. A very nicely extended accumulation schematic, which is exactly what happened. So once I realized that, I truly didn't want to see price. Break that 30-minute order block. So right here we had this 30-minute order block, and the moment we broke through it aggressively right here, I de-risked most of my positions. Okay, so my entry was here. I was up in some profits. I think I was around in 1% profit. I had a 0.5 stop loss. There you go. Yeah. So I had a 2% risk. The RR was 1. I was up 2%. I cashed out most of it. And then the rest I kept above my third tap high in case it still did like a crazy V-shaped recovery. But I realized around 1.5% on this trade, okay? But the reason why this schematic is currently failing is because this could be continuing itself, or maybe it wants to mitigate something at the top here, but this was really for me the area to push price down. So we'll have to see how that develops. The thing is, schematic like these only fail on significant moves. So when you have an extended schematic like this, they only fail when you are going to have a significant move, meaning you're going to pump up to here, okay? Like you're going to pump up to here. That's the only reason or the only way you'll see a schematic like this fail. It was the same on gold, okay? It was the same on gold when we had this, same on gold right here. Right here, we had this 1, we had this 2, we had this 3. It was 100% valid, okay? 100% valid. And you will only see a schematic like this fail when it's ready for a very aggressive move, okay? And that's why TCT has such a high win rate, because the only losses you will get if you use the right ranges and if you use the right market structure and you know what you're looking for is so high. Because only when price has a significant move, you may see it fail. And that doesn't happen often. Price oftentimes just ranges and doesn't do anything that significant until it's ready for an expansive move again. And not on every expansive move it will show signs of the opposite schematic prior, right? So that's why we have such a high win rate here at TCT trading, because only on crazy significant moves you'll see a schematic fail. And right now it looks like this is in control, okay? So I'm ready, guys. I made a post. I was expecting a consistent climb up ever since we broke structure down here September 12th. And we've got the consistent move up. So was hoping, not even hoping that this could come down. It was simply a hedge. That had some nice profits, cashed out 1.5%, and let's see where Bitcoin takes us, right? Now, the other trade I want to get into was on SUI, okay? And shout out to you guys. Literally shout out to you guys, because I was getting, and I saw so many good schematics that I was like, let me just also pull up this pair, because it was super high volume and I love to trade high volume pairs. So I was like, hey, let me just pull it up. And then I'm seeing schematics everywhere I look, like literally everywhere. So what I had on the chart and what I also posted was this model 1 in the purple dots, okay? And we came, let me go from macro to micro first. So we always do that. We came into a crucial area on the chart. This is your only, not your only because you have a daily order block up here, but this is a massive supply zone that's backed by your previous topping range volume profile. So this range ended up breaking towards the downside, as you can see. The most volume was in the middle right here. So definitely some activity going on there to push price lower. It was also exactly that moment where price started dumping aggressively right here on this candle. and it was backed by a daily order block. So we had a massive buy side liquidity curve that just got swept very easily. And after an aggressive expansion towards the upside, we can expect some sort of range, right? So we got the range, which was our Model 1 distribution, right? We got the range, which was our Model 1 TCT distribution schematic, and that got confirmed, okay? That got absolutely confirmed. There you go. That got confirmed. The entry, I think, was a bit lower. I think somewhere down here. So you would have needed to wait for more information. But from there, okay, from there, we create a range. Okay, we create a range. And this range was absolutely beautiful. Absolutely beautiful because this range was a Model 1 distribution. Okay, that got a short confirmation in here. If you zoom in on the lower time frame, it was low up. Okay, it was low up or low down, I mean. But you got the break of structure and you could have waited for the reconfirmation, which was right around here. Just following general structure rules where this was a higher low for a higher high, lower low, expectation order flow is lower high for a lower low. And then we watch that second market structure select to confirm our red lower high. Okay. So break black, confirm red, lower you go. Also, all will be explained in the mentorship regarding structure. But price came down and hit its target, which was this local range low. Okay. Now from there, Sui just gave us a beauty of a trade. Okay, absolutely beautiful. Because what we got was this accumulate or this distribution actually going in over into an accumulation. Okay, we're right here. We had our extreme demand. Extreme demand right there. And then, bro, in 1 minute, guys, I'm not even kidding you. In 1 minute or in two, I gained around a 4%. It was absolutely nuts. Enter on the break, put your stop below the low. Okay, that's your third tap for the 1, the 2, the 3. And boy, oh boy, did this squeeze up. This squeezed up so hard, bro. It was insane. Literally in like 2 to 3 candles. Look at that. In one 1 minute candle, we shot up 2.6%. It was nuts. But the beauty was that we also came down, leaving some highs up here. And not only that, we had a very significant supply zone at the top here, right? We had a nice looking supply zone at the top here. So my first thought process was that, hey, since BTC was in that distribution, I was like, hey, we could have this accumulation where the purpose of the accumulation is to hit supply before going lower, right? That was my thought process. And what was extra nice is that I took this long at 14.20 and I took the short around 12, 11 to 12. So I was hedged. Okay, I was hedged. I was long on SUI and I was short on BTC. So while BTC was a hedge to my portfolio, I also had a hedge on the Bitcoin position with this confirmation. Now, I cashed out 4% here in one single trade in 3 minutes. Like, I was so surprised. So literally, maybe I should do a giveaway because you guys put me. Yeah, that was absolutely amazing. Very quick trade, And normally, this is not the best location to long an accumulation because you're in a higher time frame distribution in higher time frame supply. But I was like, hey, I already have a short open. I can just hedge the long. I do have the confirmation and it has a reason to come higher before potentially coming lower, right? So, yeah, absolutely lovely trade. Very simple. Just a classic accumulation schematic. Nothing special about it, right? Nothing special about it. Now, lastly, we got BTC, okay? Or not BTC, we got gold. I'm just checking one thing real quick. Just checking one thing. Just making sure there's no supply up here. Technically speaking, you could use this. It's not an order block candle, but it does the job. Yeah, I've mitigated that. But that would be nasty. I don't think that happens. That would be nasty, though. That would be nasty. Because you can argue from both sides. Is this a rounding up effect, or do we just take the higher one where this is your starting point and then we just have a liquidity trail, right? So, yeah, do you want to take this or not? Oh, this is the. Oh, you don't even have 1 minute structure. Nah. Let's see, guys. Let's see. It would be nasty, though, if they made price come up that high just to dump it down. That would be nasty. But yeah, now let's talk gold. Okay, let's talk gold, and let's check what I was watching. So, gold higher time frame is simply just uptrending. Okay, we're uptrending very aggressively. Okay, very aggressively. So simply we just have an uptrend. I cannot make it easier, right? I'm scanning through the time frames. You can draw your 2 hour, you can draw your 1 hour, but simply we can just see we've been trending up very aggressively. Okay, trending up very aggressively. However, I was starting to see some signs of a potential exhaustion. Okay, because we can see if we follow our 45-minute structure, we have higher lows and higher highs, but right here we kind of had like a local PO3, and then we wicked it, and then we wicked it again, and then we kind of had a sketchy break. So if you just compare, right, if you compare how aggressive this break is to this local break, and then you had a break that didn't even produce a higher low, and then you had a break that produced the wick, I'm seeing some signs of an exhaustion of this trend, right? Just a very local sign of weakness where the higher highs aren't that significant. Okay, the higher highs aren't that significant. Now, in uptrend, we obviously pull our range from top to bottom. So just following our highs and lows, we have higher lows and higher highs. This was a wick, that was a wick, and then that's exactly how I drew my range. Okay, just like this. Had the range right here. So we had our range high, we had our range low, we got deviation 1. Okay, we got deviation 1. And then even overlapping our market sessions, we could see that our range low was our Asia low. Our range low was our Asia low. And we didn't really have a schematic itself on that first deviation, okay? I don't want to count this A1, A2, and A3 because this is very ugly, okay? The range isn't even that profound yet because there's only price action in here and then just a very sharp move up and down. So I would want to see like a better return to zone where price slowly comes back up, boom, and then you have the effect. This is just too sharp, okay? So I'll treat it as just a 1 tap and a 2 tap. However, we did leave many supply zones behind. So we can see here on the 45, got this beautiful order block right there at that second top. So I knew, even though we wicked the low, this could come back up for a potential Model 2. Okay, it could come up for a potential Model 2 distribution. So that's exactly what I traded, right? That's exactly what I traded. Where we came back up prior to pre-New York, and then right here we got that breakout structure. Very simple. Right here we got that breakout structure. Now I was a bit sketched out by that first break, okay? Bit sketched out by that first break because the second candle immediately closed back inside. And we did have higher time frame supply up here, so I didn't enter on that first candle close. I was patient, and I did enter when I saw price coming back down here. Didn't enter on that break as well, but entered right there on that candle because I could clearly see price losing the level. Put my stop loss above that high. Now, mind you, we did already take our Asia low, but locally we do have some sell side liquidity lows down here. But technically speaking, guys, I can't target the range low because this could turn into a Model 2 accumulation, right? And we did have demand underneath there, a 3 hour or 3 minute. There you go. So we did have a 3-minute demand zone that grabbed Asia low and pushed us higher. So we are in an overall uptrend. So this Model 2 distribution can go over into an accumulation, which technically speaking, if we just have to follow the trend, that makes the most sense, right? That does make the most sense. So what I did is I cashed out 70% at this low. Why? Well, it could go over in the Model 2, but I also didn't wait with cashing out because there was no structure. So normally, if we want to confirm the Model 2, we have to wait for structure to break back the bullish, right? Just like we do with every TCT schematic. But there was no structure to wait for it to break back the bullish. So I was put in a very uncomfortable position because I didn't know if we were going to go lower. And I couldn't see if the accumulation got confirmed because I had to wait for this high to break. But that's literally just my entry point where my stop loss will be, right? So I already cashed out 70% on that move down. And then we did leave some supply behind, which I did not want to break in order to continue this distribution down. So kind of this supply zone, getting acceptance back inside the supply zone was kind of my market structure break in this scenario, okay? Because we had no market structure to wait for. Price just missed this low. Now, the reason why I was also hoping for a bit lower is because potentially you could argue that if you draw your range, okay, if you draw your range from one high earlier, this could be a Model 1 going over in a Model 2. And if that was the case, you could have some sort of range inefficiency going on, right? Where there's no volume in this lower section of the range, which would make for an easy fill. So I was hoping I could potentially stretch out the target towards this low. But, once I saw price getting acceptance back inside with this very strong candle close in that supply zone, I cashed out the rest. And I had around like a 2% gain. Okay. So 2%, my apologies. 2% gain on gold, 1.5% gain on BTC, and then we had a 4% gain on SUI. So we made around 7% spread out over different accounts because I don't trade gold with the same account I trade SUI. And I also trade them with a bit of a different risk management style. But yeah, we made around 7% of the total account balance. And from there, man, if we got a confirmation in here, I would have just hedged my short, right? I would have taken profit on the short, hedged it, and then boom, let it run, let it rip. So that was insane, but there was no confirmation, okay? There was no confirmation. So I'm very curious to see what BTC will do here. Are we still going to be putting in this distribution? That would be a shame, right? That would be a shame. However, right now, I would definitely not look at it from this Model 1 anymore and just stick my range to the higher time frame one. Just because we came so high, showing that Model 1 is truly failing, because that's not what you want to see when you want to trade the Model 1. So it's definitely more Model 2 related now. We have some lows here if you do not want to count them in this rounding up effect. But there is no structure up here to either confirm it, right? There's no structure in this area. And low-key, guys, I just want price to rip. Like, I just want it to rip. But it does make sense to come down a bit to mitigate some more demand. If this is going to be the Model 2 distribution, my TCT schematics are becoming too famous because Mr. Market Maker sees it and wants to stop us out for a second extreme supply mitigation. So I'm thinking if I missed anything. No, I did not. We went over SUI, we went over gold, and we went over Bitcoin. Yeah, so bit of a longer post-trading analysis video again, just like the original ones. I haven't been trading as much. I've literally showed you guys every single trade. Maybe not every time on the same day, but in general, I have traded what I have posted. But I've posted a bit less because obviously I'm very busy working on the Discord and working on the website because some people, bro, like some people are hard to work with, man. External people can be a pain in the ass sometimes, but it's all going to be done very soon, guys. I promise. I have one more video to record for you, actually, and then I'm also head to bed. Tomorrow we got another day. Okay, guys, it was a blessed day. Peace out. Love all of you. Ciao, ciao.